I've come to realize that doing YouTube for this past year, there are some things I need to do in order for me to grow my YouTube. Check this out. Tiger King is potentially going to get a pardon for his criminal acts. The last time I talked about this guy was when I talked about 0% interest on student loans back in March until the end of September. But just recently, that changed. To refresh your memory, back in March, Tiger King was #1 on Netflix. And at the same time, Congress passed the CARES Act, which, among a bunch of things, brought student loan interest rates down to 0 until the end of September 2020. Since March, and since that video talking about student loan interest rates, I've been paying just a minimal amount on my student loans, just chipping away at the principal amount on my student debt. My plan at the end of September was to essentially just take that remaining amount and just pay it off in full before interest came back. If you're new to the channel, my name is Ver, and I talk about lessons that I've learned in life from personal experiences, personal finance, and really anything that life throws at me. With that, let's get into the video. Personally, I've been paying student loans since I graduated college in 2014, and I'm still paying them off 6 years later in 2020. If you're about to go to college, if you're in college, if you're out of college and you have student loan debt because growing up you were told if you didn't go to college you would get fined, that's why I'm talking about this topic. I got an email very recently from my student loan servicer saying in August an extension has been made for our student loan interest rates to stay at 0 until 2021. I was just making the same payments before my interest rates dropped to 0, just continually each and every month until this period in time. And I'm most likely going to be doing that until the end of the year. I also posted another Instagram story asking what my followers thought about whether or not I should just pay off my student loans as fast as possible or just pay off the minimum or just not even pay them at all. About 2/3 of people still think that I should pay them off ASAP or immediately, whereas the minority thinks I should just pay the minimum or not at all because interest rates are 0. Let's get into why that is the case, but let's do a quick recap. So a list of those points that I mentioned in that video were that these loans would be in forbearance, which essentially means that there are no required payments until the term is up, September 2020 or now 2021. And the whole point of the video was saying 0% interest on those student loans where no interest would accrue, and any money that you do put towards those loans, if you decide to pay, would go directly to principal. Another point is student loan collections would be halted. Basically, if you aren't able to pay off your loans, you'd be put into default, and then a collections agency would go after you to get payments on your loans, whether it be garnishing your wages or going directly to you. I had to look this up in that video, but garnishing wages means that an employer or anyone that is paying you would have to withhold your income and you still work for them to pay off your student loans. And last, pausing payments would not negatively impact forgiveness programs. So what exactly should you be doing, and does this extension till the end of the year really change anything? It really doesn't, but the first thing you should do is smash the like button for the YouTube algorithm. Kidding aside, but the first thing that I always say to do whenever it's the case when you're trying to save or invest money is pay off high interest consumer debt. I say this because the interest rates on credit card consumer debt is super high. It could be above 20% sometimes. Pay off those first so you're not accruing interest there. And also minimize your spending on credit at all even during this time. After you do that, the next thing that I always say is have an emergency fund or build up an emergency fund where you have 3 to 6 months of your monthly expenses saved in just an account, a savings account, or just any account where it's liquid, where you can access it really quickly. Things like your mortgage, things like your rent, things like just buying food. You don't take into account how much you spend in a month. And having that 3 to 6 months saved just in account, just in case something does happen, is really good to have because we honestly don't know if the next thing is going to happen tomorrow or in the distant future. There are many people who don't have an emergency fund, and we were ill prepared for the global illness to happen back in March. Being that interest rates are so low right now, checking accounts is an okay place to put it, but put it into a high yield savings account. Even though interest rates are around 0.8 to 1%, at least it's there and it's building interest despite losing to inflation. Going to that Instagram post, I posted another one just like I did in my first video, but majority of people say pay off student loans as soon as possible. There was a small minority, or about 1/3 of my followers, that said don't pay them at all or pay the minimum. There's obviously a divide on this, but there are pros and cons to each situation. The pros I'd have to say with paying them off ASAP is that the first thing is any money that you put towards your student loans goes directly to principal, and there will be no interest paid. By the time interest comes back at the end of the year, any interest that will accrue will be on the lower balance than compared to if there was interest the whole time. Check this out. If you're able to pay the whole balance off before interest comes back, you just have no loans anymore. On the flip side, paying the minimum has some pros as well. Paying a minimum still goes to the principal balance of those loans. Also, if you're not paying anything, any interest that would have accrued normally would just not occur at all. So the next month that you make a payment is on the same balance it was after your last payment. And by the time interest rates do kick back in, you'll hopefully be in a better financial state by paying off your high interest debt, having an emergency fund, and having more money than you would otherwise if you were just paying your money towards your student loan, especially if you were affected financially. I also want to touch on this because I have been DM'd about it regarding student loans. There are a bunch of people banking on student loan forgiveness, but honestly, that should not be your priority. Being financially responsible in terms of paying off your student loans, paying off other debts is probably the better thing to do in the meantime before that even happens. So which of these is right? It honestly depends. If for you personally and psychologically you want to pay off your student loans as fast as possible, every single payment you pay towards your student loans will go a lot further in the future with 0% rather than if there was an interest rate. At least right now, each and every single payment, and if you pay it off before interest rates kick back in, you'll be good to go. However, if you did lose income or you were personally affected by the global illness, putting money towards other things like an emergency fund, paying off your high interest debt, or spending time finding a new job to potentially get more income is probably more worth your time instead of paying off student loans. The reason I mention that is because we don't know what can happen next. If you don't have an emergency fund, how are you going to survive if something drastic happens again? That'll be more worth your time investing in yourself and putting money towards those things instead of paying off your student loans that really just have 0%. High interest debt on your consumer credit cards can have interest rates above 15%, 20, 25%, which that'll take a long amount of time if you carry a balance there versus on your student loans. That'll honestly do you a lot of good coming out of this or being prepared for whatever is next. Given all that, what am I doing? Honestly, I'm gonna be doing the same thing. I'm gonna be sipping on the same 20-cent cold brew that I've been doing for the last 6 months, and you should too. If you don't know about that, check out my video on my channel. But I'm really gonna be just making the same payments I was before student loan rates went to 0 and until the end of the year. I'll tell you this, since we've been staying in majority of the time since stay-ins happened, I haven't been going out a lot. My fiance and I have been working from home for the last 6 to 7 months, and we honestly literally leave the house maybe 1 to 3 times a month. I've been paying off my credit cards and I do have some debt there, but I've also been building up my emergency fund, which is really cool. Also, if you haven't seen this, the market actually rebounded to its all-time highs in the last 6 months from the bottom that happened in March. So I've been continually investing in the market, just sticking to my plan with the discipline that I built, even though these things happen. I'm also doing everything that I can to keep my employment because nothing is guaranteed. You can be fired tomorrow, you can be fired in a couple months, years. It honestly doesn't matter because the global illness just happened and there were so many layoffs, so nothing is guaranteed. On top of that, we also happen to pick up some part-time jobs. I personally picked up a couple part-time jobs. My fiance picked up a part-time job. We're honestly busy around the clock. And it keeps us just in a better state knowing that we do have some cash coming in just in case anything else happens. And then on top of that, I'm also making YouTube videos, which I'm not getting paid for this. So if you haven't already done so, please like the video, share it, subscribe. It helps out the channel a lot. I'm almost to my goal of 1,000 subscribers. And I do have to reiterate on this. I haven't changed my investment strategy just because the market is going to do what it's going to do. It's going to have its highs. It's going to have its lows. It's going to go up and down. But on average, if you invest your money in a broad index fund, which is what I do VT Sachs. It averages a 7% rate of return, adjusting for inflation with dividends reinvested. So I don't have any worries at all. With that said, everyone, thanks so much for watching the video. I really appreciate it. Everyone who voted on the survey, thanks so much for checking that out. Being that my last video had so many views on it, I'm sure there are so many people affected by student loans, and this information needs to get out to them. So it really helps out the algorithm reach those people to see the up-to-date information. My plan, other than extending to the end of the year, hasn't changed. I was going to pay them off at the end of this month, but I still have that goal of paying off my student loans. So again, please smash the like button if you like the video, hit the subscribe button. Also, the notification bell is there if you want to know the next time I post a video on my channel. Share the video with anyone that you think might take advantage of this information. It might help them out, friends or family who are in college, going to college, out of college, paying off student loans. I just want them to know the latest information if they have federally backed student loans. Here's my Instagram. I post from time to time there where you can find surveys about things that I talk about on my channel, or really anything like, did you hear football's back? Or hey, Mandalorian Season 2 is coming out next month. I'm a big fan of Baby Yoda and I'm super excited to see that. Also, there's one last thing I want to mention. There's two links in the description below if you've made it down there, but they're to Robinhood and Webull, where you get 3 free stocks to get started on investing. It's honestly, I think one of them is $100. You can get 2 free stocks where one of them is valued up to $1,600, maybe $1,400. It's one of those, but hey, who doesn't like free stuff? With the knowledge that you gained in this video, I really hope it was helpful. Let's get to work.
Let's see what happens.
Submit.